So, markets around the world are getting pretty nervous, but listen to this. A single meeting happening right here in India today could completely change the game. We're going to break down a briefing that points to a massive opportunity hiding in plain sight. Let's get right into it. Okay, so here's the big question, right? You look around, markets everywhere are seeing red, and you're thinking, where's the bright spot? Well, it turns out the biggest story for India today isn't coming from Wall Street or anywhere else. It's happening right here at home. But first, we have to set the stage. Let's take a quick look at the global picture, because the mood overnight was, well, definitely cautious. And you can feel those jitters spilling into our morning. And you can really feel that caution across Asia. Japan's Nikkei was down overnight, and Australia's ASX 200 took an even bigger dip. So that's the nervous backdrop we're starting with today. So what's actually causing all this anxiety? It's a pretty surprising U.S. court ruling that just struck down most of the Trump-era tariffs. Now, you might think, hey, that sounds like good news, but it actually created a ton of uncertainty. And that uncertainty sent money rushing out of stocks and into safer things like bonds, creating this wave of fear that we're seeing play out. And how does that hit us directly? Well, our early market indicator, the Gift Nifty, is pointing to a 57-point drop right at the open. So you'd think we should brace for impact, right? Well, hold on, not so fast. That's not the whole story today, not even close. Okay, now let's pivot to the real headline event of the day. This is the one that could completely overpower all that global noise. We are, of course, talking about the GST Council meeting. And this is the most crucial point to understand. While everyone else is distracted by that U.S. court ruling, the single biggest driver for the Indian market today is 100% domestic. This one meeting has the power to spark a huge move in very specific parts of the market. And this brings us to a really important idea for today, sector rotation. The easiest way to think about this is just smart money on the move. It's when investors start pulling their cash out of some industries and piling it into others because of new information. And guess what? Today's GST meeting is basically the starting gun for that exact kind of race. So the big question is, where should we be looking? Let's break down the potential winners and the potential losers that are really in the spotlight right now, all because of these expected GST changes. And here it is. This is where the opportunity just becomes crystal clear. Look at this. We're not talking about tiny little tweaks. For everyday things like shampoo, the tax could literally plummet from 18% down to just 5%. But here's the twist that creates the trade. While hybrid cars might get a nice tax cut, premium EVs could see their taxes more than triple, going from 5 to 18%. This policy decision is about to create some very clear winners and losers. I mean, think about it. That potential cut for stuff like shampoo and toothpaste, that's an absolute game changer for the FMCG sector, fast-moving consumer goods. A tax cut that big right before the huge festive shopping season could give their sales and profits a massive boost. The auto sector, though, is even more fascinating because this isn't a case of a rising tide lifting all boats. No way. A GST cut would be a jackpot for the hybrid car makers. Think Maruti Suzuki, think Toyota. But a tax hike on premium EVs? That's a brand new challenge for those companies. You are literally seeing the market split in two right before our eyes. All right, so with all this analysis laid out, the source material points to two high-conviction ideas to really capitalize on this potential shift. Let's get into them. So pick number one is a pretty straightforward but really powerful one. It's a basket of stocks from that FMCG sector, the ones that are perfectly positioned to be the most direct beneficiaries of any tax cuts. So the focus here is on the big market leaders, ITC, HUL, and Godrej Consumer. The logic is just super simple. They benefit the most, period. And get this, the source is projecting a potential 15 to 20% upside in just 3 to 6 months with an 80% probability. Now, why so high? Because this isn't just a guess. It's about riding a powerful policy tailwind. Now, the second pick is a little more interesting, a bit more of a contrarian play. It zeroes in on that split we just saw in the auto sector. It's the hybrid auto play. This one focuses squarely on the Maruti Suzuki and Toyota partnership because they're poised to be the biggest winners from any GST cut on hybrids. For the chart watchers, a key support level for Maruti is noted at 14,791. But the real insight here, the real edge, is that this is exactly the kind of sector rotation play that a lot of investors, who are distracted by all the EV hype, might completely miss.
So let's zoom back out for a second and put all these pieces together.
what does the broader market picture look like for today and maybe even the next few months? This chart shows this amazing tug of war that's happening. On one side, you have the foreign institutional investors, and they've been selling. But on the other side, our own domestic institutions. We're talking about Indian mutual funds, insurance companies. They're buying everything the foreigners are selling, and then some. This incredibly powerful domestic buying is exactly what's keeping our markets so strong. And for all of you watching the screens closely today, these are the two numbers that really matter for the Nifty Index. The key ceiling we need to break through is 24,600. If we can't get past that, then the floor, the immediate support level to watch, is 24,550. The day's action is probably going to be defined by these two levels. So, as we wrap this up, we'll leave you with this final and I think crucial question. The decisions made in today's GST meeting, they're not just going to affect today's trading session. They could very well kick off a sector rotation that rewrites the market trends for the next 6 months. It's a powerful reminder that sometimes the biggest moves begin with a single domestic catalyst.